God, I emailed. God, what did we send out? 12,000 emails or
I
something
don't know.
stupid.
Everybody we know.
So the StreamYard's kind of cool. I like it.
I like it as well because you can add stuff as you're talking. It just makes you're the director of the whole thing.
The
So,
downside is if you're a little bit of a squirrel like me, you can end up just playing with all these other things, and you know what I mean?
right.
Yeah, we are live.
We are.
Should we wait a couple more seconds, Mark, or should we get into it?
We're live. Okay.
Let's see, now I'm getting an echo.
Nope, I think we're good.
We're live. Cool. Shall we?
You hear it?
Do.
Oh my gosh, this is going to be so bad.
No, I think we're okay.
All right. We'll pretend there's no echo and we'll get going.
It says we're live.
Yeah, no, we're live. I was just kind of hoping to get some eyeball. You know, one eyeball would have been cool.
Yeah.
Right.
We'll keep going. We'll get an eyeball or two.
Okay.
Notifications will went out. Something will happen, Chris.
There you go. Hey,
If nothing else, you know, we're always building content.
It'll be available
Absolutely.
later for everyone.
Hey, hey everybody, it's Alex, and you're the sidekick, or am I the sidekick?
You're the
I forget.
sidekick.
All right, our sidekick here. It's my wife Martha, and it's our good friend Christopher Gonzalez, also known as Gonzo, but you changed it. He's with Lone Simple, and he's going to be talking to us and talking to you guys as well. Just kind of, man, we need to just do a check-in here. What's going on with the real estate market? What's it look like to buy and sell right now? Because it is
Different.
It is absolutely different. Would you agree with that, Chris?
oh yeah, it's crazy. You know, there's so much right now, and well, you'll go right into that to that flick, and I can actually kind of touch base on certain things that we just found out a couple of weeks ago, and which is pretty amazing. So
for you
yeah.
personally, or for the mortgage world?
The mortgage world. The mortgage world. You know, it's
whenever somebody says, "Oh, we found out something exciting," I'm always thinking,
well, it is. It's exciting because we're still busy. We're so busy. You know, I mean, it's 2000. When we had that refi boom, now we have a refi and a purchase boom at the same time.
So
you know,
you guys have a little extra busy going on, and we'll talk about that on the real estate side as well, because it's interesting. Because you'll hear some agents, "Oh my God, it's busier than I've ever seen." Then we look at the numbers, and the numbers don't justify that. So I think we had some players just pull out of the game completely, and other people got busier. But I want to focus on the overall market because it's still good, but it's not. We'll look at it.
okay.
Right, let's get started. So a lot of the things just on the practical standpoint of stuff has changed, just like showing property.
Absolutely. The way we show properties has changed. They're placed on us for a while. No one was really looking at anything for a couple weeks.
I know.
Virtual showings took over, which is awesome. And I think it's helpful for people who don't live in the state that are thinking about relocating. It gives them a good idea of a house.
I think so.
Until they can travel out here and actually see the house. But we have new protocols in place, such as open house.
Yeah, what are some of those protocols you got, Mark?
Well,
not you. I mean, it's
everybody.
Everybody's supposed to be doing this.
You have to wear a mask. We can't have more than 5 people in a home.
And I can't wear my Joker mask? Or will that work?
If it covers your mouth and nose, I think you're okay. As few people as possible on showings. So if you can hold off on bringing mom and grandma and some of the kids with you, that would be extremely helpful. There's always time to come see the house later after you decide you want to buy it. We are asking our sellers to leave all the doors inside the house open and lights on so that few people have to touch things. And if things need to be opened, let's leave it to just the realtor showing you the property.
Let's minimize touching.
That way only one person's opening doors and touching light switches.
Yes.
Wash your hands. We're putting hand washing stations in our listings so that the vacant homes especially, people can come in, wash their hands, or hand sanitizer. And open houses, we have to track who's there. So, we always have sign-in sheets at open houses, which some people are like, "Oh, I'm already working with somebody, I don't want to sign." please sign it
Yeah,
for
it's a
tracking purposes.
different reason now.
Just in case something happens. On the rare chance, we just want to be able to get a hold of you if something happens. So we're asking everyone to please sign it.
So open houses are going again. Have you been out to any open houses, Chris?
Yeah, I went to a couple out here in my area, and they are doing those precautions that you were saying, and people are still walking in the houses and looking at them, and it's crazy, but yeah, I mean, they're still doing them. Absolutely.
I think people have lightened up a little bit than when it first came on. Everything, it seems like people are a little bit more comfortable.
Yeah.
The listings we're taking now, because we put on 4 listings this week, and people, they seem to be more reasonable, I think, than 3 months ago. They're not completely freaking out over things.
Yeah, they're a little less scared. Everybody kind of knows what to
Well, and I
expect
think
now.
also people are like, I got to get on with my life, man. I can't keep waiting to see what's going to happen. I've got to do my thing.
We don't know how long it's going to be, so we have to adjust.
Absolutely. So that's been probably the biggest changes on the practical thing. So just even on the loan side, Chris, you and I were talking, things are a little different. About a month or two ago, not you personally, but I would just say in general, the mortgage industries got hit. They had a hiccup bad. They got behind loans. Oh, we had appraisers not wanting to go to work, right? I mean, things were backed up. Not for Chris. He's amazing. Everybody.
You're too kind.
Talk about that. Talk about some of the things that, is different now to smooth it out because of that hiccup we had.
Okay, well, as you see, the appraisers have gone to the drive-bys. So, and a lot of the lenders are accepting those drive-bys. And it goes through a different type of underwriting process, so to make sure that we meet that investor guidelines. So it makes it easier.
What's a drive-by or a desktop appraisal? What does that mean to
a desktop appraisal? Okay, so a drive-by and desktop appraisal means that they take all the kind of like a market analysis on what you do. So they pull out the upcoming sales and the different sales in that local area to make sure that value is within that value that they're actually selling that home. It goes through 2 different types of underwriting process. It goes through the third party, which is the appraisal process, which is the appraisal company. So appraiser gets it, sends it to their company. Their company underwrites it. Once they feel comfortable with that, then they send it to the lender. Then the lender goes ahead and underwrites it as well. So they actually underwrite with their information on what they're pulling on their system to make sure that value is good for the investor. So that's what drive-bys are, and they're costing a lot less than the regular $550. So
and then the short of it, they're not going in the houses, are they?
No. I mean, some of them are still doing it, and some aren't. So, and then what's so neat about this is that they're also doing them on refinances as well. So, if you're doing a rate and term refinance, you might be able to get an automatic value appraisal. So it really depends on the investor, which is pretty neat. Nice. Yeah.
It's streamlining it.
It's streamlining it. It's quicker. We're not waiting 2 to 3 weeks or however it might be. A lot of mortgage companies have like 10 to 15 different companies that they work with to pick up those appraisals. So we bid them out, and then our appraisal company comes back to us, say, "Hey, which one do you want? This one's $500. This one's $470," and then we choose the cheaper one or the faster one. Yeah, it's like, hey, can you get it next week for $50 more?
Absolutely.
Right?
All right, student loans. What's up with student loans, Chris?
Well, student loans, they're deferring them. And it's crazy because some of them are, some of the people that have already kept on paying on their student loans, and then all of a sudden, hey, they're deferred. So as a lender, we need to see a payment. And either ways, so we take a certain percentage of the student loan, whether it's 1% to 2% of the amount, and that's how we calculate the payment. So if it's $1,000 that you owe on a student loan, it's like $20 that you'd be paying a month. So we calculate that against your income.
So even
So-
though it's deferred, you're still counting that against it, right?
Yes, absolutely, absolutely, absolutely.
That makes sense.
Yeah,
Mhm.
not forgiven.
It's
Not forgiven. No, no. You still got to
Hey,
pay
so,
them.
so with our furloughed workers and employment verification, what are we doing differently on that?
Well, so they put out a big old article on furlough workers and them coming back in, and it's almost like a case to case situation for our underwriting and our investors. So what we look at is we look at the time length that they've been with that company. Okay, so to make it more justifiable for the investor. So if that person's been with that company for 12 to 15 to 10, 15 years and he's coming back, well, that makes it more justified going, okay, this is how much money he's making and we need the first check. Because and then we do a verification of employment. Where it gets hard is when we have people that are coming in as commissioned employees.
Oh, those real estate agents.
Yeah, commissioned employees, hourly employees. That hourly employees opposed to salary is kind of hard because we have to make sure that we get a verification of employment stating that they are, doing 40 hours and they will be doing 40 hours. So the verification of employment we do at the initial, we do it in the middle, and we do it at the time of funding as well. So, so we're doing it at the time of
That was a
funding.
big deal, huh?
Yeah. Making sure you still have a job, and what's happening,
Lenders are so picky, Chris.
what's happening is
Wow.
what's happening is where a lender doesn't want to get themselves kind of ducked in the shorts would be somebody getting a mortgage, purchasing a home, and then all of a sudden, before their first payment, they furlough it.
Right.
And then all of a sudden, that lender gets stuck with money. They get stuck. Their warehouse line is all locked up.
So do
And
you guys have I'm not going to ask for details, but are there certain industries that seem to be a little bit more high risk right now than others?
yeah, so
We're
what's
not going to name any of them, but it's just
So what's happening right now is that there's a lot of brokers out there, and then you have a lot of bank institutions and a lot of places that service their loans, meaning that they service and they hold the notes. Okay, so
Right.
like brokers such as myself, we sell off our loans, but we have a line of credit. Those line of credits can only go accumulate for so much before we sell them off. If we do not sell off those loans, we lock up that line of credit. And if we lock up that line of credit, well, guess what? We can't fund those loans. So if you see a lot of lenders out there going, it's a title company's fault or this fault or that fault, well, it possibly is their warehouse line because they don't have enough money to fund the loans. So,
I still don't understand all the loan stuff.
yeah. And
It's
it's interesting. It really is. But things are working better. A lot of
All right,
they're
so
opening
we
up.
got- What about these interest rates, man?
Oh man,
What are we, low threes?
gosh,
Two?
I just locked in a 30-year mortgage purchase, a $480,000 loan amount at like a 2.875%.
That's free money.
With an
Have you
APR
ever-
of 2.9.
Have you
it's.
ever in your life seen anything like that?
I have, it in 11 years, when we had that refi boom back then, we saw these low interest rates, right? So now, what lenders are hurting right now, they're going, there's too much volume. Now we have a refi boom and we have a purchase boom. And I'm like,
easy.
what if the rates go down even further? We're not going to have any money to lend out, right?
It's crazy.
Oh, yeah.
And even with all this, so it does, there's the interest rates are low, which is good for buyers.
Yes.
But even with everything, so the survey came out, and 87% of home sellers are still concerned that their home won't sell because of the COVID issues. Well, it kind of makes sense, though. So we've had an inventory shortage to begin with.
Yeah.
And just even looking at what we have coming on now, we don't have enough houses coming on, man. So like you guys got super busy. I think we would be busier if we had more inventory.
Yes. And a lot of people are like, oh, I'm just going to wait and see what happens.
And we've got clients now waiting to see
Yeah.
what happens with this whole COVID thing. So it's interesting. Chris is busy, we're busy, but I think it could be busier, don't you?
I
If
think
we
so
didn't have
too.
the COVID thing, I think it would have been busier.
I think we just have to be a little bit more creative when we're out there looking for the homes. Maybe looking at renovation properties or properties that we might, kind of look at maybe utilizing the renovation loans out there
Absolutely.
because of the shortages.
And I think the other thing we could be doing is like what we're doing now is just trying to inform people of what's going on.
Yes.
Absolutely.
Just keep people informed. Look, we've got safety precautions in place. Everybody's being smart about it. I'm not going to say the odds are low or high on anything. I don't know that, but people we're being smart about it. And if you need to sell your house, do what you need to do, right?
Right.
And I have got some funny lag on my slides here. So they're starting to pile up on me. I guess we'll just work through it. So this was kind of interesting to see. So this was like, we're in February, March, right? Housing market was just ripping it. We actually did nationally have a decline for a couple months there. Even locally, I know we were down in March and April, 10%?
I think it was
The overall sales were down 10%. And again, everybody's like, as busy as they've ever been. And then we come up to here and, we're recovering. We're not there yet, but we're working on it. So I think we're probably going to stay busy for a while. Don't you, Chris?
Yeah, I think so. I think in the next 3 to 4 quarters, we're still going to have the low interest rates. Nothing's going to really be moving. I mean, it's, if anything, God, they're not going to lower them anymore. But,
They need to. I think honestly, I think money's cheap enough. That's not going to be the driver on that. I think what's going to be the driver is going to be consumer confidence. How do they feel about the economy, their job? We've got a lot of people that might be hurting financially in a little bit, It's that. And I think the other piece is just going to be, if they can't find a house, if there's no inventory, they're just going to stay where they're at.
Yep.
And I think that might actually be the biggest problem we have. There's just going to be a complacency. They're just going to stop. Which, again, the best way for us to overcome that is for us to keep talking. Oh, did you hear like Susie Orman? I guess she came out on her show or a Facebook post or something saying it's a horrible time. Don't buy a house right now. So we get little talking heads like that, saying it's not a good time to buy. Just hold your money. We've got to be vigilant in educating people.
Yes.
Absolutely. Absolutely.
All right. So just our kind of numbers, what we had going on here locally, our average price is $280,000. So we're up over this time last year.
Yeah.
And this is the highest it's been. So this is now higher than our 2007 peak. So, if anybody was still holding on for a recovery,
You're here.
Yeah, we're here. As good as it's going to get. Hold out for anything else. You got that rental you want to sell. But like when we're looking at the closed sales, Chris, everybody's saying they're so busy. That looks like 14 more houses sold this last month.
June.
That's it. That's not like super crazy.
Yeah, we it's interesting because we're looking at the different numbers of the different quarters, and we did over $230 billion or something in the housing market the second quarter. So it's a lot more. It's just I don't get it. I really don't. And I think it's what it is calculating the refinance money as well. So
absolutely. Well, and if we're just looking at volume, house pricing's up. So if you're just looking at volume, right? Yeah, we're going to be up. A lot of areas are up 10, 12%, but our units aren't higher. So, more volume, but we're not necessarily selling more houses.
Yes.
Right.
All right, what's this number here, babe?
The inventory is actually down quite a bit. So
a year ago, we had
more
almost
than half.
2,700 houses on the market. Right now, we got 1,200.
Right.
That gives us a little over a month's supply of homes.
Yeah, we don't have a lot of houses to sell, or we would be selling more.
I think, like Chris talked about, the interest rates are so low.
And it also creates such a competitiveness that's driving prices up. When you have 15 showings in one day on a house, because it's in a price range people can afford, it's going to drive the price of that house way up.
Absolutely. So if we're talking about what people can be doing right now, one, you need to be serious about buying a house.
Yes.
You need to be there. You can't. I had a guy call me last night, and he's got a real estate agent, and it sounds like he's got 5 other real estate agents, and he kind of, well, I'm looking, and I've noticed that prices went up for the last 6 months, and
He should have bought 6
he's not engaging and pulling the trigger. The guy's going to be priced out of the market.
Yes.
So if you're in the market, don't mess around right now. Get your pre-approval letter, call Chris, whoever, and know you're not going to get the 100% house.
Yeah.
We need to be in the mindset of, I need a house. I need home ownership. All right. This is going to improve
Well, and
mine.
even maybe do something like Chris is saying, don't get your 100% house, but maybe you can get that rehab loan
Absolutely.
and make
Right.
it your dream house.
Absolutely. But this isn't the time to be messing around.
No.
This isn't the time to try to sell your house or try to buy a house,
It's the time to sell it or buy
because
it.
your house will sell.
Yes.
Right.
I mean, how many expireds have we had in the last 30 days?
Some days there's none.
We've had maybe 30, and we were
30.
getting several hundred.
Yeah.
So it is completely different than we've ever seen. All right, so that's kind of where we are. Where do you think we're going? Right. So this chart represents the forbearance issue, right? So we
Okay.
got a lot of people saying, "Oh, I'm just going to wait till these foreclosures come on." But if we look at this, 77% of the people that are actively on a forbearance right now, Chris, have over 20% equity in their home.
So they can sell it.
So they're not going to get foreclosed on.
Okay, so, and I wanted to, I wanted to touch a little bit on that forbearance part that
Yeah.
a lot of people don't know.
Big
That
deal.
if you are in forbearance now, you have to have a mortgage history. So if you sell your home and you're currently on forbearance, we as a lender have to have 12 months of a mortgage history from you. So if you go on forbearance and you're selling your home, it might be a year before you're able to purchase a property.
Okay.
Oh.
So on that forbearance thing as well, because I know some mortgage companies are saying, "Oh, we understand you might not be able to lump sum pay these 3 months." Are they working with everybody? Are they picking and choosing? What is the?
Well, Fannie Mae basically says you have to show, and these are the bigger investors, you have to show that you've been making that payment every month because it's not going to reflect on your credit report.
Okay.
So when we're looking at your credit report, we want to make sure, because it'd be like you missing 2 months, and then it'd be you missing 30-day lates, 2 30-day lates.
Okay.
So you wouldn't be able to get financed.
Okay. Okay. That makes sense.
So it's not necessarily going to ding your credit, but when you guys are looking at it, you need 12 months of
Payment history, and they have to do it upfront. And that's the thing. We're checking, like if you're an investor and you're purchasing another property, we're checking every one of your mortgages, make sure that and at the end of application, we're also checking to make sure that that you've made your last mortgage payment. And it's a requirement right now for every institution, because what we would do is Fannie Mae and all the other investors are still allowing them to sell the house. They're selling, sell the house even if it's in forbearance, to sell off. But the whole thing is that if they default on it, it's 500 basis points that is charged to the broker. So that means I'm going to pay almost 500% of whatever the loan amount is back because they defaulted on that loan. That's why everybody's so careful with this forbearance thing, because if you default on a loan after you sold it to Fannie or Freddie or to other investors, they charge back your company close to 500 basis points.
Oh, so they charge like Loan Simple back or whoever.
Right, exactly.
Oh, So that's why these mortgage companies are making sure everything is like, I'm not saying you guys being more picky, but you're making sure people are not buying houses that shouldn't be buying houses.
Right. And I mean, just making sure that they're, I mean, I have a lot of investors, and I think people have to realize when they go into forbearance, if they have multiple properties underneath their credit report, let's say you have a forbearance on your Wells Fargo. You want to go in forbearance on one of your Wells Fargo. You have two other properties with Wells Fargo. They're not only going to forbear that one, they'll forbear all other two, too, without you even asking. So they're going to forbear every one of them. You're going, well, I didn't ask for forbearance on those other ones, but I just asked for forbearance on that. It doesn't make a difference. They're going to forbear all of them. If you replied for forbearance and they have them with, the investor has them, they're going to forbear all of them.
Okay.
See, so if I'm looking at this and just listening to what you're saying, I don't think we're going to have a flood of houses coming on the market that are foreclosed on.
Nope.
I mean, one, they can't buy another house for a year.
Right. And
You know?
hopefully their mortgage company will work with them so they're
Yeah,
not
so
paying.
I think
Right.
what will happen is people get their jobs back, everything, and I don't think we're going to have a flood of houses. And they still got equity. So, I mean, worst case, they sell the house, they break even, or they make a little money,
And they rent.
and they move on. I don't think we're going to have a flood of houses coming on the market foreclosed. We got 1% that are negative equity.
Yeah, that's
All
not
these
very
other
many.
guys could sell and break even.
Break
These
even.
guys
Mhm.
should make money. So looking ahead, what are people predicting here? We got NAR, Freddie Mac, Fannie Mae, Zellman, Mortgage Bankers Association. Is that a real thing? Mortgage Bankers Association?
Yes, sir.
All right.
MBA.
Oh, so it's legit.
That's MBA. Yeah, I mean that's exactly. Those are great numbers because that's what they're predicting in the next quarter and stuff. All increases. All increases.
Your home price expectation survey, is that the general population?
I think that is. I think that's just.
So the population is not optimistic, but
No.
all the banks are.
Yeah. So, if we're being honest, these aren't big numbers.
No,
I
but
mean,
it's not down.
I mean, they would still consider that possibly recession because if you're at 9%, now you're 4%. Technically, that's a recession because you're down,
Yeah.
but it's not negative. A recession does not mean negative numbers. It means lower than it was before.
Mhm.
So, we can still be optimistic, but yeah, I think those are fair, don't you? I think that's a fair estimate.
I think so too.
Next
I
couple
think
years, it's not going to be crazy, just nice and steady, the way Martha likes it.
Yeah.
Predictable,
Little growth.
a little safe.
Yeah.
So, Chris, should people still buy or sell their house right now?
Absolutely. Absolutely. With the information that we're giving them, yeah, absolutely. Sell, buy, sell, buy. I mean, these are great times. It really is. It's so super exciting. It really is.
It is.
To know the value of the houses have gone up so much and knowing that you're going to make so much money by selling your house and possibly maybe upgrading or maybe downgrading or something new, something fresh. Heck, you're always home. Might as well buy a new home. Right?
But I like that because some of the feedback that we've gotten from people is they're worried that, it's going to tank. They're going to buy their house and then they're going to lose 10% value immediately because it's going down. We're not seeing that. I mean, if we're even predicting 2 years out, we're predicting growth 3%. If you get 2-3% a year, you're fine in a couple years.
Which I also think it's kind of nice if these people, if they're able to buy or sell their house and they have a lot of equity to put towards the next house and the interest rate's low,
Oh, those guys.
they're locked in at that nice low interest rate for 30 years. That's awesome.
Oh yeah.
Yeah.
So you got these guys on their 4% loans that they had, sell their property, and they got 20% down now. Dude, those guys are killing it, aren't they? No
Yeah.
PMI, killer low interest rate. They're able to upgrade home substantially for not much payment. It is an exciting time. I agree.
And you're
Mhm.
locked in for that. So for the next 30 years, you benefit from that wonderful low interest rate.
So I will agree with you, Chris. It is a good time to buy and sell.
I agree.
I would say though, like we said earlier, it's not a good time to be messing around. It's
Right.
not a good time to be trying the market. It's not a good time to be trying to buy. Have your stuff in order.
Absolutely.
Get pre-qualified with a great lender like Chris at Loan Simple. Work with great real estate agents like Martha and Alex Vallejos. Hey, what's up? It's not a good time to be messing around.
No, be ready to buy.
and get ready because your house will sell.
Right.
If you know about your house and your neighborhood, what's going on, let us know. You can message us on Facebook or on YouTube. We're easy to find.
Mhm.
And Chris as well, he's easy to find. How can they find you, Chris?
They can go into my Facebook, YouTube, and my Instagram, Inside the Queue with Chris. You can go into Chris Gonzalez at Lone Simple as well. So,
He's easy.
Yeah.
Like I tell people, if you Google my name and you can't find me, I'm not a good real estate agent.
right?
You can find me.
Everybody Google.
You can't find me. Hey, thank you, buddy. I appreciate it, and thank you guys. We'll talk to you later.
Yeah, thank you.
Thanks.